Hello friends! In this video I will show you a few more tools that you can use to be successful in your trading. You already know Myfxbook Outlook Indicator, one of my favorite tools. Sentiment data is one of the most reliable tools to predict the price moves. Many say that you can't know where the price is going. It's impossible to predict the price moves. It is possible if you have a sentiment data. We don't do only reactionary trading here. We do also predictive trading. We know where a price is going. It is possible to predict it, and I will show you how. Well, you saw my previous videos, but here I will introduce you to a few more tools. You perhaps recognize Ichimoku Cloud. Ichimoku had been proven to be one of the most reliable indicators, but here we went a step further, and we're using Ichimoku Cloud based on Wilder exponential moving average, and we use open price for that, and here we doubled the size of the cloud to have more reliability when it comes to trends, long-term trends. Then here you see the indicator called Urovny, which is pretty good also in capturing trends. It's based on the moving average. And here in the second window you see accumulation distribution. Is a volume-based indicator invented by American trader called Chaikin. It adds volume to the price moves, and if you apply moving averages to it, this is accumulation distribution with moving averages together. It also has a predictive value, and it can tell you before whether reversals happen when they happen. So it's not a lag indicator, it's kind of has predictive power. I'll show you how you can use it. But our main tool in predicting the price moves is of course sentiment data. And you see it in the bottom here, Myfxbook Outlook Indicator. Then I added separators. They are almost monthly separators. I told you about monthly separators in previous video that you can use along with Myfxbook Outlook Indicator, but those are NFP days. That's when NFP releases employment data in America. They are very important when it comes to Forex trading. So I added the lines which mark exact time when the NFP news is coming out. So it's actually in the beginning of the month, always on the 7th, or sometimes on the 9th of the month, the first Friday of the month, as you know it. 15:30 GMT time, we have NFP news. So I added those as separators when it comes to the analysis of sentiment data. Why? Because you see the volatility changes immediately. Here you see 1st of April, in the beginning of April. On the 6th of April, as soon as we got NFP news, the price pattern changed, also sentiment pattern changed. Is a different type of volatility and different types of pattern both in price and sentiment data in between NFP news days. Price tends to reverse. Euro and major Forex pairs to reverse after NFP days, or at least to pull back. We see often reversals or pullbacks after NFP days. That's what exactly happened in the beginning of March. We saw the reversal when the NFP news came in. We saw a reversal also in the beginning of February. NFP news came in, we saw downtrend going. Then NFP news came, we see uptrend going the rest of the months. It can happen, of course, that for 2 months we had the uptrend, but still, even here after the NFP news came in, we saw a pullback of 151 pips. It's no joke to survive a move of 150 pips. If you have a position, usually you will be kicked out. So you have to watch NFP days. Here we had the pullback of 160 pips after NFP. And a few days later, though, but it came in. But also this NFP news market reversal. You see, we saw a reversal in price move. It serves as catalyst. It had catalytic effects upon the price. So it affects the price very much. NFP news. I didn't put the numbers of NFP, how many employed people in America, just the lines, just to separate, to use them along with Myfxbook Outlook Indicator. So as you know, we use contrarian approach when it comes to using Myfxbook Outlook Indicator, and we go the opposite way what the crowd is doing. As you see here in January, crowd was selling euro and price was going up all the time. Was about the Ichimoku Cloud, was going up for the entire month, from NFP news to the NFP news. All months, January, price was going up. And you could also use accumulation distribution, which filters out the noise. You could see that accumulation distribution is about 50 moving average, exponential moving average, and about 200. It didn't even go below it, you know. It went below already in the end of the month, so it was like a bell trigger that something might happen after the NFP news. And indeed, it happened. A reversal, immediately reversal, which if you are in long position, you can't survive, because it was 232 pips drop after NFP news. And you could see already the change, immediate change in positioning of traders. Most traders went long, opposite of course. Retailers are 90% long and price move opposite to their position. So you see the blue line about the red. Most of retailers are long, and for a significant time, you see by the 9th of February, you could see that the long positions dominate. Accumulation distribution is below 50. Price is below Urovny. It is in the cloud and going down. So if you see by the middle of the month, by the start of the month, that the predominant dominating power are the bulls, it's very likely that the rest of the month price will continue in the same direction. Between NFP news to the NFP news, and price was going down all the months. You see the blue line dominated above the red, means the bulls dominated above the red, but price goes opposite to the retailers. That's why it was going down. When the trend change came, it came after the NFP news, and also the pattern changed. You see a sentiment pattern changed, but the price couldn't go otherwise also, as you know, because ESB was hiking interest rates, so it had to go up sooner or later. So this pullback was counter trend pullback of 373 pips in a bullish year. This was NFP driven pullback, which often happens. So you have to watch NFP days, because after them we might have significant pullback against the global trends, against the yearly trends. It's a kind of thing that really messes up with the trends NFP. So now we see again at the start of April, I already knew that price will be going up. How could I knew that? I saw immediately after NFP news that that the reds were above the blue. And you see another thing. You see the bulls tend to stay at certain level. They were staying at 5,000 lots most of March, and and April. They were pushing to 35,000 lots twice, but they couldn't hold. You see, they immediately dropped it back to their hold, so to say, to their level, to 5,000 lots. They couldn't hold. But here you see that the bears, the red line, it means if the bears are pushing, price will be going the opposite direction. Price will be going up. When the bears are dominating, price is going up. The retailers, contrarian approach. Remember that. Price move opposite to what the retailers are doing. So here you see that the bears push it very much, and they push it to 35,000 lots. And they could hold at the certain levels. You see, they could hold at 20,000 lots, and they didn't drop immediately. So they kind of had room, space to breathe. You know, they were breathing above. They could hold at those levels. You see, and they didn't drop back. Eventually, they did drop back to 6,800 lots, but they had more power, definitely more power during the months of March, and you could trade up. That's why you would be. I was buying all those moves. See, I was buying all here upon retracements. I was buying and exiting, so because I knew that they will be going up. You see, interest rates, yearly pay was here. You could clearly see also in Myfxbook Outlook sentiment data. So many things were pointing out that shouting really that price is going up, and it was, you could also use monthly Camarilla. You see, price was immediately after, or at the start of the month was already above them. Camarilla monthly R1, usually it goes to R3, and it went exactly to monthly Camarilla R3 just above where it's reversed. What happens at R3 Camarilla monthly? Price tends to reverse back to the close. That's exactly what happened. Price reversed back. So when it was here close to the monthly close, we see that price went up again. I was buying this move all the time since the bottom. So and I knew price will take out this high. I knew. Why did I knew that? You see, this high from February will be taken because we have so many traders which are short. All those huge amount of traders, 20,000 lots, are short here. And where are their stops? Their stops were about this high. First their stops were about this high and then this high. So when we have so many traders are short at 20,000 lots, of course their stops will be taken because 90% of them are losing, you know. And where are their stops? They are above this high. So price exactly went above this high, and it took all those traders. My Myfxbook Outlook Indicator lags by 4 hours. That's why it's kind of flat now. So I wouldn't buy now when those traders, all this crowd, red cloud, had been stopped out above this high, because price will pull back. It never moves the same direction for many days. Usually pulls back sooner or later for some 100 pips. You know, so it's going up eventually due to the interest rates, but we will see big pullbacks too. So, and where did price react exactly? At the monthly roof ceiling. This blue line is monthly H4. You see it couldn't break above the monthly roof. April roof is the blue line. But it took the high. It took the high by how many pips? The previous high. It took the previous high by 37 pips. That's where most of stops were. You see of this red crowd of those bears, all those people who have been shorting. That's where there were stops. So we're taken. So I knew that so many people are short. You could see it. You see price is going opposite way, and it's not hard to guess where are their stops. Their stops right here, above these highs. You see 30 pips. So now what will happen to the red line? It will start going down, because those traders, those 20,000 lots, much of them, many of them, had been neutralized after this high had been taken. But we will see in 4 hours, because Myfxbook lags a bit, so we will pull out. And you also see this thin move, skinny move. You see those skinny moves, they call it price imbalances. That's from Chris Laurie. He teaches about price inefficiencies, price imbalances. Those sharp moves, you see, skinny moves, skinny lags, like here, 15th of March, we had the skinny move. They all get filled, you know. They're similar to price gaps, those skinny moves, they get filled. And here we have a big skinny move, like very thin move, very sharp moves, thin moves. They get filled. So in strong uptrends, of course, they don't get filled completely, but to some extent, you see. So we will see this this long move, this move of 234 pips is likely to be filled at least to the previous high. Maybe some 100 pips they would get filled, because this price extension into the new territory above the previous high is likely to be filled. Price moves efficiently or non-efficiently. I can show you efficient price move. For example, this is efficient price move when price goes up and down. Let's call it efficient price move. And when price moves like this, just one sharp move, it's called inefficient price moves. Imbalance, usually those getting filled. This you can learn at Chris Laurie course. It's one of the best when it comes to price action. It costs $1,000. His course, I took it. There's a lot of material to go through his course, but you can also watch his free videos on YouTube. Chris Laurie, that's where the ICT took his knowledge from Chris Laurie. He was a former student, and all he teaching is just replicating Chris Laurie. You know, he was his student. He's teaching his stuff. He calls those tops of those fractals order blocks, the top of fractals or the bottom of fractals. But it is Chris Laurie teaching on fractals. You can watch it in the original version. Chris Laurie. He has a price course. Now, you can join it if you wish to learn about price action. That's and here accumulation distribution. I didn't tell you about this in the bottom here. So you see it predicts price moves very well. That also we can use that tool to. You see all this bearish move from March 2022 to to November 2022. Price stayed below 200. Accumulation distribution stayed below 200 EMA, and you could sell the shorts from the EMA 200 or 50 EMA when accumulation distribution touches this thing, you see. And usually you see it broke, you can see it broke here above 50, so you know it's a signal that it's going up, it's pulling back at least. It never went above 200 EMA. So this is this tool, this cloud is called Wilder Exponential Moving Average Cloud. Ichimoku Cloud based on Wilder Exponential Moving Average. Open prices. Then we have Urovny here, and then we have accumulation distribution, Camarilla pivot points, NFP separators. We have Myfxbook Outlook Indicator with levels, horizontal levels after the lot sizes. And so it's very important to watch where the bears and the bulls stay during the months in Myfxbook Outlook. Here you see in December the bulls stayed at the level of 3,000 lots, you see, and they really were pushing up, but were coming back to 3,000 lots. We saw here a change in pattern immediately after the NFP news, 6th of January, and immediately we had the bigger dominance from the bears, so price moves up, of course, and bears also tended to stay at 12,000 lots. Here now bulls are staying at around 3,280 lots, and they don't have strength to establish themselves at higher levels. They did push about just one shot here, one shot there, one shot there, here 2 shots, long shots, but immediately the price goes up because they can't hold. The bulls don't have power. It means price moves opposite, don't misunderstand me, but because price moves opposite to the retailers, so they don't have powers to hold at the higher levels. So the rest of the months I still expect price to be bullish, but we might see a pullback. We might see another shot like this now from the blue line up. That means price will go down, and it's very common, but I believe that the April roof will be broken. That's my belief, because the red line dominates about the blue, and it tends to dominate the rest of the month. We still have 2 weeks, so we might see this few more candles going up here, you know, bullish candles. After a pullback, of course, we might see the break to 112 even this month, or at least it's very likely to break above the roof. Of course, I will try to wait for a pullback, some pullback. There might be 2-3 days pullback, but we still have 2 weeks until NFP news. So I'm definitely looking for loans. That question is where to enter. We will see. So that's how you can use Myfxbook Outlook Indicator, Accumulation distribution with moving average, Ichimoku Cloud based on Wilder exponential moving average, Urovny trend indicator, trend channel. Urovny is called, Urovny, whatever you call it. I just tested some indicators as I see what works, but they are not my primary tools, those moving averages, clouds. I just use them as extra tools. My major data comes from interest rates, from pivots, Camarilla pivot points, very reliable, and of course sentiment data, Myfxbook Outlook Indicator. Those tools that I use. I wish success in your trading and all the best.